What's going on, guys? It's Matt back with another video. Before we get into it, I just want you guys to remember we still have a Telegram channel. The Liquid Asset Institute is something that I came up with personally. Basically, we're just here to share ideas and also share a lot of mindset, because being a trader for almost two and a half, 3 years, the mindset is the most important thing after the technicals, of course. But let's get into the charts, guys. I had a little markups and whatever, but we're gonna do a fresh start for the 5 markets that I personally trade or personally watch: the dollar index, the treasury market, US 10-year note, the bonds, euro dollar, cable, and then euro pound intermarket analysis to see what if the euro or the pound is going to consolidate for the week or not. But let's start with the daily chart on the dollar index. As you can see, actually we have to start from a higher time frame. So after I do all of these markups going into the week, this upcoming week, we're gonna have the same levels on, and obviously as day by day goes, we're gonna either take levels out that don't really matter anymore and add new levels, and we're gonna see if our anticipatory skills are growing. And I want you guys to grow with me so you guys can hop on the charts, and if you guys are seeing different things that I'm seeing, join the Liquid Asset Institute and drop your comments on what do you guys think the markets are going to do as well. By the way, I'm not a financial advisor and I do not sell anything. So if you see anything in the comments or anybody trying to sell you anything, when you're messing with Matthew Trades Effects, just know it's the real deal over here. We're just trying to get better at technicals and then talk to other traders to help with mindset. And that's basically what the Liquid Asset Institute is for. So enough of me chapping. Let's get into these charts. Monthly chart. Let's just look at the price action right here. A lot of people come and they do if you're on the monthly, weekly, daily, you need to just look either in the past 3 months or the past 6 months of what price action's been doing, just to get your overall quarterly shift and your macro. So just off of what we see here, what have we done? We came from this volume imbalance here, right? Nice little volume imbalance. We tag it, we trade lower. Where are we trading lower to? Liquidity. We had a rejection block here and an old low. Obviously, with the benefit of hindsight, we tagged the old low and started to go higher. As you can see, we're in a real consolidated market on the monthly. Obviously, we can get trades on, the 1 hour, the 15 minute, the 5 minute. But knowing that we're in a consolidation will put you in perspective that if you're losing trades, dial it back because you're in a consolidated market, or dial the risk back and be very picky, because in these markets, you want markets like these, trading in these 4 bullish months, that you're looking for buys. These 4 bearish months, you're only looking for sells. But when you get into a month like this, a time period like this where it's back and forth, you want to be a buyer, seller, buy, it's going to be kind of harder. So just be nimble and tag the old low. And what I'm seeing now is this rejection block, this last down close, the lowest down close. And I'm also seeing the mean threshold of this down close candle as well. But I also forgot to mention, after we took this old low, we traded up into the mean threshold of this up close candle. So this is what I mean by the order flow is trapped. But we'll see a clearer view when we go down to the weekly time frame. So that volume imbalance here, we took out an old high, came lower, took out an old low, went into consolidation and rallied higher. That mean threshold on the monthly, you guys can go back to what I just drew out. We can refine it into the up close on the weekly. And if it was a mean threshold on the monthly, high chance is going to be a mean threshold on the weekly as well. So I get a mean threshold of the weekly order block. Let me not form fit for any benefit. Let me actually get my fib out, get the 50%, and you guys can see to the tick, right? To the tick here. I'm gonna put my line on the 50%, delete the fib, and then you'll see to the tick. Draw that over. So what am I seeing after we hit a bearish order block? Obviously, we're gonna see, well, not all the times. Of course, this can blast through this order block and take out the old high. But as you can see, we hit it and we traded off of it, meaning that this level was a valid institutional level. As you can see, the last 3 weeks we've been bearish, and where we trading to, that monthly bullish order block, mean threshold, and then this lower one is the rejection block, which lines up perfectly with a weekly bullish order block. So I'm gonna just watch me clean all of these lines up to form fit the weekly chart. So we have an old low got taken. I'm gonna use the rejection block on the weekly, and I'm gonna use the order block open on the weekly as well. Yeah. So now you can see pretty clean. Volume imbalance, broke the structure. So if I grab a fib from high to low, we came up into a premium. Now we're trading lower into discount, and most likely these old lows here, the liquidity pool. So next week I will be looking for bearish pricing on the dollar index, unless institutions start buying up on this bearish order block, the bullish order block or the bullish rejection block. So that's what I'm seeing. Go to the daily real quick. That was that weekly level here. Now, if you see what I see, buy side of the curve, sell side of the curve. Look at this price action right here. What does that look like to you? Because to me, this looks like a consolidation, a rally above the consolidation, a return, fair value, then another rally into a premium array. So this is looking like ICT's market maker sell model. Market maker sell model. Let me draw that out. Make this market maker sell model. Yeah, so original consolidation, return, smart money reversal, and now every up candle will be a selling opportunity. So up candle gets broken, gets traded back up into the rejection block. Up candles get broken, trading back up into another, trades back up into the up candle, goes lower. So obviously next week I'm looking for bearish pricing until, I'm looking for a bearish week. We open, probably trade into this fair value gap or come higher into this volume imbalance, and then try to get these lows. Yeah, but if not, we're gonna come down into this right here. We're gonna come down into this high probability bullish order block because of the gap, and we're gonna start trading up, and then this consolidation might be a market maker buy model, but we will have to see, obviously. But I'm more leaning towards the bearish bias to take out this sell side liquidity pool. Okay, that's our daily. We're gonna stop at the daily. We're not going down to the 4 hour. So let's draw out some daily. Actually, let's get our 20-day look back. So the 20 days here. So we have a range from this high to low. So if you don't know what I just did there, I took the present day. Well, it's a weekend right now, but I took Friday's close and I just counted back 20 days. If you see that number, 20, right here, this is 20-day look back. So in the 20-day look back, I'm looking for the high and the highest high and the lowest low, which is highest high, lowest low. So equilibrium's here. We're obviously in a discount. Everything above this equilibrium price point to the high is a premium market. So if we do end up trading back above equilibrium into probably this wick and start, then we'll probably be able to sell off. But that doesn't mean we can't just sell off from this newly created fair value gap here, like what is it called, institutional order flow drill, or whatever ICT wants to call it, is when create a fair value gap, next candle opens, trades high, just pokes above, not all the way into the fair value gap, but just pokes above it and then start to go lower. I'm gonna be looking for that either Monday or Tuesday to trade into that lower, the sell stops. Another PD array would be this volume imbalance here. Volume imbalance is just the opening. There was no bodies here, so there's no volume, just wicks. So it's a volume imbalance. And as you can see, we traded these last two up close candles, got traded up into. So that's the last time the institution's sold price. You could put that on our open. So if we break above this price point here, we might be switching sides to go and take out the buy stops here. So I'm gonna leave you guys with these levels to watch for the next week. So we have a couple premium levels and a couple discount levels, but mainly looking for a bearish week. Let's get into the bonds. As you can see on the monthly chart, bonds are just in the dust. That's why the dollar index is in the dust and the euro dollar. But what can we see? We see a fair value gap get traded to here. So we're trying to focus on the last couple months. But I said look for the last couple months. But if you see that we're coming from a fair value gap, you have to draw it out to give you context. Okay, that's why price went 3 times trying to get into that fair value gap. Didn't work. However, on a lower time frame, you're going to see that this created a clean buy side liquidity pool, which you'll see. But let's just draw out some levels. You can see that we traded down into this bullish rejection block. So it was break swing low. Then this last down close candle got broken here, becoming a potential either a bullish rejection block or a bullish order block. It used the rejection, came back up, came into a fair value gap 3 times, and now we traded lower. What we have to watch out for is the mean threshold of this last down close candle. As you can see, the prior month tagged it and closed up, and then it retraced off and closed. Now this month, June, we're trading lower back into that price point, and maybe we're gonna credit the low of the month and start trading above these highs. But let's get to a weekly chart to show you more precision and more clean. Last down close candle, get the mean threshold of that. All right, I have to show you guys something. See how when I came down into the weekly chart, this line is not on top of the open right here to make it a bullish order block? Yeah, you can see that price is rejecting it. But to get more precise, if this is right here inside of this candle, don't you think that price can come down to the mean threshold? If it's already telling you no, this level here, that's not going to be the exact price, because on a monthly, the price is here. So to refine it on a weekly time frame, I'm going to grab this fib and I'm going to put this on the mean threshold. And time and time again, I see consistency that refining these levels, you get pretty close to the low. So from low to high comes down mean threshold, we rally above these old highs into that monthly fair value gap, hits it once, twice, 3 times, gives up the ghost, break structure here. I'm not seeing this as a break of structure though. I'm seeing this as a run on stops, right? A run on stops into again, if I go here, let me draw that line back out. If I go here, this line on the monthly lined up between this wick right here. But if I look lower, don't you see a fair value gap and a bullish order block? So I would not just keep it the level here. Yeah, we came and we're playing off the level now, but to get more precision, I'm going to refine it into the fair value gap. And then the fair value gap has a third level, which is the consequent encroachment, which is just the 50%. So I'm going to get the 50% and you'll see the precision. Boom. So now, last week, we traded lower on the high end of the fair value gap and we closed off. Next week, I'm looking for a bullish run, just like how this candle open, went lower and then closed on the high. I'm looking for open, probably trade a little lower, and then to take out this swing high, and then eventually these highs over here, because this looks like an amazing this was a resistance point for retail. Now it's going to be Candyland for smart money. So let's go down into a daily time frame now, and let's get our levels refined. So we have this liquidity pool up here. Draw that out, and I can write buy side liquidity make this like buy side liquidity pool. As I told you, I'm looking at this old low here getting ran. This manipulation here was just a run on stops into the consequent encroachment of that weekly fair value gap. And now, as you can see, we broke structure here on the daily, broke structure here. Swing high gets broken. So from this low to high, what do we have? Notice how we came into a discount, and look at the reaction on the OTE, 79%. The body stayed above it. The wicks just do the damage, but the bodies tell the story. So I'm gonna be looking for bullish pricing on the bond market, which is just gonna be very influential on the dollar index to go lower. So what do we can add a couple more levels here. I see a rejection block being traded into right now. Rejection block last Friday, the Friday that just passed, we came down, we traded lower. So if we think we're bullish, we have to look for some premium arrays that we can offset some positions. We have an old high, but we have another old high here. So I'm just going to draw it from here. And this is going to be another buy side liquidity pool. 2 old highs, 1 lower, 1 higher. So we're going to either run this buy side and then run this buy side here. And then probably from this high to this low, we have another fair value gap here. So only sell side delivery was offered here. So we might be trying to rally back up into this inefficiency. But as you've seen on the monthly and the weekly, that buy side liquidity pool here it looks very clean. So this could be a whole consolidation right here. Trade lower, smart money reversal. This right now is the low risk buy on the daily chart, and we're gonna probably see a rally on bonds. So I'm gonna have these levels here, and we're gonna go through it, you know, this upcoming week every day. At the close, we're gonna see if our levels played out and if we can add more or take some levels out that we don't need anymore. So now on to the markets that we actually place trades on: euro, dollar. I'm gonna kind of speed this up now because we already went through the dollar index and the treasury notes, so that should give you a benchmark on all foreign currencies that you trade. So I'm gonna just do this pretty quick. Old high gets taken, but then it also traded into the mean threshold of this last down close candle. So price action is kind of trapped right now. However, with the bearish pricing on the dollar index, I think this month is going to rally above these highs here, which is the liquidity pool, and then eventually try to get up into this wick here, or this inefficiency here. Go to the weekly chart. What do we see? We see a run on stops here, trade lower. I actually thought when we ran these stops, we were gonna run the sell side liquidity. However, I also knew that we were trading down into a discount market, and we had a lovely volume imbalance here, which I can also refine from that monthly chart. A beautiful volume imbalance here, which we tagged once, then twice, and then last week was a nice, very predictable up close week, which we called out in a Liquid Asset Institute bullish up close. So now this kind of looks pretty clear to me that we're going to run these buy stops, okay? And then let's go into a daily chart. If that's being said, you can obviously see the model, the opposite of the dollar index. This is a market maker buy model. Let me add my question mark to be, This was that smart money reversal, low risk buy. And as I said, when we get that smart money reversal, if we're on the buy side of the curve, every down close candle will support price. So down close, either the order block or the rejection block here, because of the wicks rejection block, break above this old high, trades down into this last down close candle, rally. So it's either we're going to trade into the fair value gap or back down into this down close bullish order block. So let's draw these levels out. We have a fair value gap here. We have a last down close candle, the high. I'm gonna do the high and the open because there's no fair value gap. So it's a low probability order block, but every down close candle should support price if this is a market maker buy model. So we have to draw that out. And yeah, these are the only levels I see at the moment. And then for the buy side, for the upside, this level here, which is just the mean threshold of this up close candle, and then obviously the old high, the buy side liquidity, the buy side liquidity. Okay, so we can either open, trade lower into this fair value gap and rally, making a Monday, Tuesday, Wednesday low of the week, or we can do a deeper retracement from this low to high into this last down close candle and then see a retracement. But with this buy side liquidity pool looking so clean, and with bonds looking like it's going to rally next week and dollar looking like it's going to sell off, this might be just a quick Monday, Tuesday low of the week, and then a Wednesday, Thursday, Friday expansion to take these buy side, whoever's short up here is going to take them out and put them, and we're going to offset our positions with a buy limit or with a sell limit. Because if we buy here, we have a sell limit up here, but breakout traders are going to be having their buy side or their buy limits above this old high, so when price goes up they can break out and go higher. And that's really why stop runs happen, because of the limit orders that novice traders put. So back in the day, somebody would, well, I never was a breakout trader, but a breakout trader would be like, okay, we have resistance here. If we trade above, it's either going to continue higher or use the same level as support to continue going higher. But that's usually, that happens sometimes, but sometimes it doesn't happen either. So yeah, this went a little tangent right there. These are my levels for the euro dollar. Market maker buy model, liquidity pool. So yeah, you guys can have all these levels on your chart if you guys want. Going into the pound dollar, we have a monthly fair value gap that I've been watching. Well, we should have all been watching. All right, price traded up, or is trading up into this fair value gap. Now we have the high end and we have the low end. Low end actually got tagged last month, and I thought we would make a run on these lows, but with the dollar being in consolidation and a little weak, the pound was able to trade or start trading for this month higher. Let's also draw out that consequent encroachment, which is just the 50%, and I'm seeing it being hit now. So this might be something to watch out for, but we'll go on a weekly time frame. Okay, so it seems that we actually traded up into the higher end of this fair value gap on the weekly chart here. And as well as the last 3 weeks have been bullish for the pound. 1, 2, 3. And we just roll in an old high. So with euro being bullish, dollar being bearish for me, and cable trading up into a premium array, I might need more time for cable this week to get a bias, because I can see us opening and trying to rally up into this high end of the order block, or potentially this rejection block here. But after a stop run and 3 weeks of bullishness on pound, we can probably see some give back down into the lower end of the fair value gap, or these, well, which is also the same as these last 3 down close candles, which is now, after last week blowing through it, this now becomes a bullish order block. Okay, so let me actually get that the consequent encroachment or the mean threshold of these last 3 candles. Put that lower there. And now let's go to a daily time frame. So yeah, out of cable and euro, cable's been way more bullish, as you can see. And the market maker buy model that I had mapped out a couple weeks back has already played out now. with this being the original consolidation, redistribution, smart money reversal. Last down close candles are going to support price now. Accumulate here, and then take out original consolidation. Original consolidation gets taken out, which is a buy side liquidity pool. So now buy side is purged, or buy side has been triggered. And this is exactly what I was talking about just a while ago. This old high here, people would have buy stops. And, if you had a buy stop here, you would probably made profit this time because there was no run above it and immediate give back. It actually went a couple days above the old high. But let's get these daily levels marked out. We have a couple upside, which we're using on the weekly time frame. And then on a downside, we have some gap in here, but it's pretty high from the range. So I'm not even going to use that. I'm going to use this last down close candle here. And price can also come back here too. So the levels on the weekly and monthly, when I refine them, I still leave them because these levels were basically used by the institutions. So if we come back down to them, we might have some sponsorship. Still, around these levels. But we have this last down close candle here, the high and the open. And if you want, you can put out the mean threshold as well and a rejection block, but we have to see what happens first before we draw those out. And that's all I'm really seeing for the cable, really. Cable, I'm going to need more time. Probably let Monday trade. See if we actually come lower. Or if we do play off this fair value gap here, we're going to continue to 1.29 700s and 1.30 500s. So yeah, but I'm just being mindful because we did take out buy side liquidity. Okay, last pair, euro pound for our intermarket analysis. Last couple months, what are we seeing? We've seen this high to this low, trade up, back up into this wick, and now we took out an old low. So this is another reason why cable might actually go lower. I'm not gonna say that right now. I need more information. And we have this last down close candle, which I'm gonna use the mean threshold, which is here. And that's really all the levels we have to worry. Well, because I don't know. I'm gonna also put the rejection block here, and then the old low, just for completeness sake, because we are looking bearish right now. But if this is a turtle soup and we start buying up, the levels we can look for is this rejection block here, the mean threshold of this last up close candle, and then obviously the high, which is going to have buy side liquidity. So sell side liquidity, we're in this range from low to high, coming down into this, the 50% of this rejection block. So what do we see? We can refine this. Notice how it's not at the open, so I'm gonna refine it to the mean threshold on the weekly. Which is there. So we do actually have a range for the euro pound to go lower next week, allowing cable to go higher. So we might, and yeah, with euro being bullish for me and the dollar index being bearish, obviously cable should see some bullishness as well. But obviously, with what we just said about the liquidity pool and it trading up into that weekly fair value gap, if you guys go back in the video, it doesn't really look too clean or clear for me. And as well as the last 3 weeks were bullish. So let's also refine this rejection block here on the weekly. Rejection block is just that last, if it's bullish, it's gonna be that last down close. And if it's bearish, it's gonna be that highest up close. And then we also have the old low. Let's go into the daily. What do we see from the daily? Price has been bearish, so every up close candle should support price. Last week we had a up close candle here, support price, or not support, be resistance to price. And then we also had this right here. When it traded up into this mean threshold, I would not have counted that trade or not, or even got into that trade, because this up close candle did not get confirmed as a bearish order block until Friday. So when Friday takes out the low, now this becomes an up close. But we also had this wick here, so I'm not gonna mark out the mean threshold because it looks like it's already been like capitalized on. So I'm gonna just go ahead and use this this rejection block here, the bearish rejection block. As I said, the highest up close with the wicks, as well as another one right here, highest up close with the wicks. And then we have this old high right here. So if we do open and we trade above the old high into this rejection block and go lower, that can be a scenario. Or we just open, trade into this rejection block, leaving this old high, and then we come lower into the 0.8450 level. Right, so that's what I'm seeing for the euro pound as well. We did run stops here as well, but from the weekly time frame, it looks like we can see some bearish pricing. So I'm looking probably for an open, trade higher, go lower, giving the cable time to go higher, or yeah, giving the cable a reason to go higher as well. So with all of that being said, that was our quick little market, markup, and just drawing out the key levels to look for next week. So I hope you guys enjoyed that little video. I'm gonna start trying to be more consistent. I know I always say it, but my goal with this new playlist is to every week or every weekend come to the market when markets are not trading, do a little recap of last week for my personal, journey, but then also record a video of me doing my full analysis and placing out the key levels for the week to come. And then obviously, guys, listen, I am not a financial advisor, and I'm not telling you what levels to trade off of. You have to do it for yourself, guys. You know this. But this is just a little boost and a little help, or a little insight to how I'm trading the markets. And this is why I need you guys to come into the Liquid Asset Institute and start placing your charts, because it's a one man's game, but it's also a journey that can be shared. So that's why we made this institute. So you guys have a great rest of your day. Have a great Father's Day to all the fathers out there. Mothers, if you're a single parent, then happy Father's Day to you too. And peace and love, guys. I'll see you guys in the next video. The next video is probably going to be after the Monday candle trades. So probably like late Monday. But then Tuesday, Wednesday, Thursday, the 3 days that I personally trade, I will be doing heavy market analysis and heavy market like reviews. I'll be posting that. So probably get like four videos a week. One for the weekend, one for Tuesday. You're probably gonna get 5. Cause one to recap the week and to forecast the week. One on Monday night, and then one Tuesday night, Wednesday night, and then Thursday night. Not really Thursday night because I'm not trading Fridays. So you're probably going to get 4 videos a week from me starting, with this video. So as I said, peace and love, guys. And remember, there's risk to this market, and stay safe.